Hi, everyone. Welcome back to the Always Bookkeeping YouTube channel. My name is Alana, and I'm joined by Tony, who is one of the co-owners of Always Bookkeeping. Thanks for joining me again.
Thanks, Alana. Thanks for having me.
A pleasure as always. I'm really excited about this topic. What are we going to be talking about?
We're going to be talking about what can you claim on your personal tax as a self-employed person or a sole proprietorship.
Perfect. Well, let's just jump right in.
Yep, let's jump right in.
Perfect. Today, we're answering one of the most common questions we hear from self-employed individuals. What can I actually claim on my personal taxes as a sole proprietor? If you're a freelancer, a consultant, a contractor, or if you're running a small business under your own name, this episode is for you. So stay tuned. So the first question I have for you, Tony, is what is a sole proprietor for tax purposes?
So a sole proprietor or a self-employed person is a business that's not incorporated. So yourself and the business are one legal entity.
Okay.
So what it means is that you file your personal tax return as a T1, and then your business income and business expenses are reported on Form T2125, and all the profits are taxed as your personal marginal rate.
All right. And the only way around that is to become incorporated.
That's right. So if you don't want to get taxed as on the marginal personal rate, then the only way around that would be, like you said, be incorporated business instead of a sole proprietor.
Okay, that's easy to remember.
Yeah, very easy.
And what's the general rule for claiming expenses?
So what can you claim? The golden rule is anything that you incur with the business to create income right now or future income is usually deductible. But as long as it's reasonable, and CRA expects common sense when you claim your expenses.
They expect common sense.
That's right.
I love that. What are the most common deductible business expenses?
So the most common one that we usually see are advertising and marketing.
Okay.
So that's usually we see a lot in self-employed business is that they spend money on YouTube ads, Facebook ads, Instagram ads, all of the social media ads that they want to have for their business to create income. Another one would be marketing. So if you have like a business coach, a marketing coach, those are all expensible through the business. The next one would be office supplies, whatever you buy, like pen, books, logs for your vehicle. Mm-hmm. Next would be software and subscription. So if you use like accounting software like QuickBooks Online, you can expense that. Subscription, like if you're a masseuse or a tattoo artist person and you need music within your studio, you can pay for Spotify, you can pay for Apple Music, professional fees. So that would be our fees as your bookkeeper or your accountant. So that we call legal and professional fees. You can expense that through your business. Business insurance, if you are a subcontractor that do electricians, plumber, or HVAC person, you require to have worker comms insurance. So that is WCB insurance. Banks and credit card fees. So if you have a credit card that you pay interest on, or bank fees that, to open a bank account, to have that bank account open, they charge you a monthly fee. Those are all expenses that you can go through the business. Business license and permits. If you're, like I said, if you're a subcontractor, you require permits from the city. You require a permit to, perform a certain task. You can expense those. Education, that's very popular within, the tattoo industry, masseuse industry. They pay for, get updated on their skill. So they do that maybe once or twice a year. You can expense that. And then to go with that, you can also claim your travel expense. So if you go to a conference within a different city, a different country, you can expense that conference ticket, travel tickets, plane tickets, hotel expenses through the business. Telephone and internet expense, only the business portion for this one though. Okay. So if you have two phones, one for strictly business and one for personal, you can only claim the business phone.
Right. That's quite an extensive list.
Yeah. So a lot of our sole proprietorship, when they come to us, they don't maximize their deductions just because they don't think that they can do that within the business. But when they come to us, we can, maximize your expense so you don't pay as much tax on your profit at the end of the year.
All right. That's really informative. What about expenses that business owners think that they can claim but aren't necessarily deductible?
So they make a lot of mistakes with that where they claim personal expense within the business. So like I said, for the travel expense, mileage, for example, if you travel from your home to your regular place of business, so like maybe your office, your tattoo studio, you can claim that travel expense. But if you travel from your home to your client place, if you have like, a house call, or you do business, or you go to a supplier place, then you can claim that travel expense.
Okay.
Yeah.
And this is why it's good to have a bookkeeper to keep track of all of these things.
And ask questions. If you're not sure, that's why we charge the way that we do at Always Bookkeeping, which is a flat monthly fee. So we encourage our business owners, or any self-employed sole proprietor, to give us a call whenever you have questions, so that you can clearly understand what you can and cannot claim on for your business, and not have that fear where when you pick up the phone, you're on the clock and you get charged for whenever you send us, give us a text, a call, or an email. We do strongly encourage business owners that work with us to communicate.
That's great. The more they communicate, the easier your job is.
Exactly.
Great. So, Tony, a lot of people who are sole proprietors work out of their home. So can they claim home office business expenses? And what is something to be careful about when you do that?
You can for sure claim home office expense, and we can help you with that. But think of it like this. So if you use part of your home for your business, whether that is to meet clients, conduct business there where you do a lot of admin tasks, you can claim that part of your home for business expense. And what are you allowed to claim? So you can claim part of your utilities, internet, property tax, home insurance. If you don't pay mortgage, if it's a rental place, you can claim your rent. You can claim maintenance and minor repairs on your home. And that only apply to part of the home that you use for your business. And the big caution when you claim home office expense is that we don't want you to claim depreciation expense on the home. Okay. The reason for that is your principal residence is protected from the principal residence exemption. So if CRA deemed that your home is a place of business rather than a place of for you to live, and when you decide to sell your principal residence, CRA may deem it as not apply for the exemption for principal capital gains. So you have to pay the capital gains on when you sell the home. So be super careful when you claim your home office. Usually we, like I said, if we, just know how much of the area that you use for the business, claim certain things that we can claim within the home business, and avoid making the mistake of claiming things that you can claim with a CRA. So when you sell your home, you don't have to pay that capital gains later. Yeah,
that would be a huge amount that you have to pay unexpectedly.
Yeah. So it's better to not claim such a huge amount on your home office and pay a bigger tax bill when you sell your home later, and just minimize that home office expense, and don't have to worry about selling your home and pay that big capital gains tax.
Right. And is there a percentage that you should aim to be at, or at least be under, when you're claiming a percentage of your home?
Yeah, usually we give you 10% of your home that you use for your business. So if your house is 2,000 square foot, then we just use 200 to claim you for your home office. And then we be careful with what we claim for the mortgage, the utilities. We can't claim everything, so we just have to do a calculation on whether at the end of the year how much that will be, and we can claim just a portion of it.
Excellent. That seems very reasonable.
Very, very. So if you're not sure, just give us a call. We as your professional bookkeeper, we can help you claim things conservatively if we have to. And then also we can be aggressive on another area of the business expense.
So Tony, we know what expenses are deductible. You've explained that very well, but what are not deductible?
So anything that at the year end, if CRA have a conversation with you and you can explain it without being awkward, you can claim it. So for example, personal groceries, you cannot put on a business. Personal trips, let's say if you're dropping off your kids at school, you are just traveling from home to the office on a regular basis, like Monday to Friday, you just drive to your office. You're not stopping anywhere to pick up any supplies. You're not stopping or not going into another business to conduct any business, then you can claim that. Any clothing purchases, like personal expenses, you can claim through the business. Any fines and penalties, like parking fines or speeding tickets, you can claim that through the business. So yeah, like there's a, like I said, from the previous question, if the expenses don't create income or future revenue for you, you can claim it through the business.
It's interesting that you talk about the groceries. I did hear about a business owner who tried claiming his groceries, saying that he would bring coffee and pop to work, therefore it was a business expense. That doesn't fly.
No. So if I mean, it's not special case. So let's say if you run a business, it doesn't really happen a lot with sole proprietorship or self-employed just because you don't have an office. But for us, if we're running a bookkeeping firm and we have a waiting area and we offer coffee, water, or pops to our clients, then yeah, we can, expense, that grocery purchase for the business just because we do use it for our clients. But if you're just running, like a consulting company that are remote, and you don't really have clients coming in face-to-face meeting, and you just do it, through the internet, and you buy grocery and you say that you use it on your clients, CRA, can tell that it's not a business expense that you can claim.
CRA is pretty smart sometimes.
Exactly. And like I said, if you're not using your common sense when you claim expenses, CRA will find out.
I love that. Common sense. And if you can't explain it to CRA without it being awkward.
Exactly.
So what records do I need to keep, Tony?
The most obvious one would be all your expense receipts. So you want to keep all your receipts for the minimum of 7 years. So physical receipt, you have to, what we tell our client is that just have, at the beginning of the year, just buy a box or just have a box laying around with file folders. So label it January, February, March, and so on for the whole year. And then the box is labeled as 2026. So that's this year. Keep all of that in one box, and then so on. 7 years down the road, if CRA hasn't been asking for those receipts to explain your expenses, then you can get rid of the oldest one, which is 7 years later, and then just keep your record that way. Another one would be bank and credit card statements. Same thing, 7 years. Mileage logs. This is very important. So if you want to claim your mileage for your business, so for, like I said, if you're traveling from home to supplier area, if you want to pick up supplies, like a restaurant, you want to go pick up grocery, if you're meeting your client at their home or place of business, then you can claim those mileage. Invoices, if you are paying for subcontractor or any kind of invoices you get for your business, you want to keep those. Contracts, if you're performing a job for a client, then you want to keep those contracts. CRA require you to, like again, CRA wants you to keep your all the paper records for 7 years.
Paper records, can you scan them digitally, and do you still need to keep the paper copies?
You do need to keep the original copy for 7 years.
All right.
Even though if you scan it and have it conveniently provided digitally, you still need to keep the record, the original copy for CRA purposes.
Good to know.
Yeah.
Excellent. Well, I think that's everything that we were going to talk about today. If someone is watching this video and is like, I think I need to book a meeting with Always, they're not going to charge me for every question I have, how can they book in?
To book a first free initial consult with Always Bookkeeping, you can contact us at 780-554-8356 or email us at info@alwaysbookkeeping.ca. You can also visit us at www.alwaysbookkeeping.ca. We just require your first name, last name, phone number and email address, and we'll contact you to set up a meeting. The first one is free. We usually meet up with you for 15 minutes, 20 minutes to learn more about you, learn more about your business, and then we can offer the services that fit you the best. Thanks for watching as always, and we'll see you at the next episode.